This week, the New York Times basically declared crypto and the entire crypto industry dead. According to their multi-page Ivy League vetted "This is why you can't have nice things" breakdown, the dream is over. The great escape from the 9-to-5 matrix, gone. The way out, closed. And I'm not gonna lie, when you read it, you kind of start believing it. You start thinking maybe you're not breaking out of the system. Maybe you're ending up with someone like this instead of this for the rest of your life. And that's when the doubt creeps in. Maybe we're cooked. But I'm here to snap you out of that because something big is happening under the surface. And instead of saying crypto is dead, we need to talk about what's actually separating right now. Today, I'm going to break down what the mainstream media gets wrong about crypto, show you what the data is actually saying, and explain why the dip might not be here for long. Welcome back. I'm Sophie. This is Satoshi. Let's go. The New York Times just declared the crypto industry dead, and these headlines are leading shows on CNBC. It feels coordinated, and headlines that we got recently regarding the Jane Street attack confirm the paranoia from the industry isn't justified. We feel attacked, targeted, and they're feeling like they're winning. But this is where we have to snap out of that behavior. First, I want to show you this clip from CNBC in which Jared Bernstein is claiming crypto is dead. After the clip, I'm going to tell you what he has right and what he has wrong and provide the evidence to back it up. The crypto industry may be in trouble, but Bitcoin is very much alive.
Bitcoin continuing its move lower this morning, down more than 40% from its recent highs, currently down about 2.7%. Those recent highs were last October as investors really rotated broadly away from riskier assets. Can it ever gain back the value it has lost? Our next guests are out with an op-ed in the New York Times this morning saying not even the current pro-crypto White House can stop this skid. Joining us now, Jared Bernstein, Council of Economic Advisors Chair under the Biden administration, and Ryan Cummings, CEA member during the Biden administration as well, now Chief of Staff at the Stanford Institute for Economic Policymaking. Thank you both for joining us here. So what's your thinking behind this? Because obviously this is still a relatively nascent asset class. On the crypto side, they may say that just because an asset is volatile doesn't mean that it's worthless. Maybe it's just in the early stages of adoption.
Well, the early stage excuse is probably past its sell-by date. And the point of our piece today is be careful what you wish for. I mean, this is an asset that we argue has almost zero legal use cases. It's pretty good for scammers. And it was able to hide behind the apron strings of complaints about regulatory regimes that diminished its value. Once the Trump administration took office and completely embraced the industry, I mean, the crypto bros pretty much purchased the best Congress and president they could ask for, the sheen really came off the rose, and its value proposition went pretty negative pretty quickly.
Yeah, I want to follow up on that real quickly before we get over to you, Ryan. Jared, I've heard that similar lament about the campaign spending and all the crypto money going in, even compared to traditional finance. It's like a multiple of 10 in terms of the dollars from the crypto industry in this most recent election. How much of that was paid in Bitcoin? And given what Bitcoin has done since the election, how do you think that changes things for the midterms?
Well, first of all, it's very much the case that this industry lobbied up faster than any we've ever seen. And I think one of the revealing factors behind the recent decline in its value is precisely the fact that even once you kind of control the regulatory environment, if you really lack fundamental value, investors are eventually going to take their risks off when it comes to your asset. Much of the payments that you mentioned have gotten transferred into dollars. And so, you know, when we say that the Trump administration has enriched itself by over $1 billion, we're actually talking sovereign dollars right there. And by the way, one of the things that helps you if you own an exchange like the World Liberty Financial Exchange is that you make money whether the coin goes up or down. So we view this as you know, really pretty much a racket run by the Trump family at this point.
That narrative works if everything in the space rises and falls together, but the data says something very different is happening. While the claim is that obviously crypto is over, the reality is that Google searches for buy Bitcoin just hit their highest level in 5 years. 5 years. That's since 2021, when the thing was going on. We're about 50% down from all-time highs right now, so this isn't euphoric mania. This is a dip. Dare I say, a bear market. And during a bear market, people, smart people anyway, are searching how to buy. So that's not really panic behavior if you ask me. That's, I've seen this movie before and I know how it ends behavior.
Oh, déjà vu.
And I'm waiting for my entry so my little cousin doesn't get a Lambo before I do behavior. And it gets better. Since the Jane Street headline hit, Bitcoin is up 10% in a single day. 10%! After weeks of getting beat up, that's what Bitcoin does. It grinds down slowly and then it moves violently. There's a stat that most people don't internalize. Historically, a huge chunk of Bitcoin's yearly gains happen in a tiny fraction of days, like under 5% of trading days.
If you weren't in it the best 20 days from 2018 to 2025, you missed 600% gains. I mean, so, my view is you buy it, you hold it, you dollar cost average.
So you miss those days, you miss the year. And those days don't necessarily come with a notification on your phone.
The struggle is real. The struggle is real, but to be more serious, when Bitcoin is hitting all-time highs, there's a sense of exuberance, and all of the media turns positive, and it's glowing, and people are doing high fives. And when it draws down, there's a gloominess to it, and then people over forecast to the negative. I think that it's the volatility that drives the engagement and the interest and the speculation, and there's something to talk about, and they're talking about us. What they're not talking about is they're not talking about, real estate on the Upper East Side of Manhattan. They're not talking about timber rights. Like people, they talk about all these non-volatile assets. Well, non-volatile assets means there's no news. And if there's no news, there's no interest.
That surprise is the tell. When it moves fast. And the people Googling buy Bitcoin right now, they don't want to miss that window. This isn't a crash cycle. It's a sorting cycle. The casino tokens, quiet. The narrative chains, rebranding. The hype projects, suddenly talking about sustainability. Meanwhile, Bitcoin just keeps producing blocks. No emergency roadmap, no founder explaining a pivot, no tokenomics redesign, just uptime. And even in a 50% drawdown, zoom out 5 or 10 years, and the chart doesn't look dead at all. It looks volatile, and volatility is scary, but it's not a failure. Most assets don't move 10% in a day. Most assets don't get declared dead hundreds of times and then recover. Bitcoin does. And that pattern should tell you something.
At the point that I give that speech, I'm saying, hey, this is an iPhone 5. There's not a 6-year-old that doesn't want this iPhone 5. At the point I give the speech, there's general consensus that the iPhone is something you can't live without, and no one's got a product nearly as good. And yet the conventional market's counter-trading it. Okay, so if you got rich in the past decade, you probably bought big tech. You probably bought Apple. You probably bought Google. You probably bought Meta. Maybe you bought Amazon. Maybe you bought NVIDIA. Maybe you bought Tesla. There's no way you got rich without buying big tech. Big tech has been the primary screaming success. The stocks are up 10x, 20x, 30x, 50x. But in all cases, you find examples of the conventional market that underappreciates them and underestimates them. With Apple, it was 7 years through the wilderness. With Amazon, I remember Amazon for something like 4 to 8 years, conventional wisdom was Amazon's an awful company. They'll never make any money. They'll never amount to anything. You almost could have bought Amazon anytime for a decade while conventional investors crapped all over it. And it wasn't until 2020 during the lockdowns that people go, oh, wow, I guess we need Amazon. And of course, just this last week, Amazon's revenue surpassed Walmart, and Amazon became the largest company in the world by revenue. But when could you have concluded Amazon was going to work? 2010, 2012. It was already obvious there was going to be no competitor to Amazon. No one could possibly do what they were doing by 2012. 8 years later, conventional wisdom is that. The same is true with Apple. It's like, so Bitcoin, at what point do you have the fundamental ability to conclude that Bitcoin is global digital capital? Now, like what's the indicia? The President of the United States is telling you, right? The head of the Fed, Kevin Warsh, is telling you. The head of the Treasury, Scott Bessent, is telling you. The head of the SEC, the head of the CFTC, 8 other cabinet members, all the Middle Eastern sovereign wealth funds are telling you. BlackRock is telling you, right? My company is 100x its enterprise value, right? When in the history of the capital markets did a company ever buy $55 billion worth of a commodity and then loudly declare that this is digital capital and this is the new money of the world?
One side needs narrative momentum. The other survives narrative collapse. That's the separation. And markets reward durability. So before we go any further, quick gut check.
Message!
Check your setup. If you're not running a node, you're not verifying your own transactions, and you're relying on someone else. The Bitcoin way will get your coins off of the exchange into cold storage and guide you step by step in setting up your own node. This isn't theory, it's hands-on training from the masters of self-custody. If we're entering a new world order, you better be sovereign in this one. Visit thebitcoinway.com/Satoshi to book your consultation. That's thebitcoinway.com/SATOSHE.
We have to talk about is price suppression as well. I think that's, even though everyone talks about that that Bitcoin is, that there will be a supply shock, and I think there is a supply shock. The amount of Bitcoins traded and openly traded compared to how much are being held by long-term holders, how much is available it's nothing. So really, it won't require that much for it to move drastically up. But there is, because given it's a completely open, free market, that even with regulations around the world trying to impose on it, it won't stop doing what it's doing. People are able to control the market to some extent. So maybe that's what acted on the 2021 market. That's what suppressed its price from jumping too high up. I think that we could get that again in 2025, but I think that there will be one point where it will run away. It has to run away. You can't, you can't control it forever. So you will get maybe Samson Mao's Omega candle, and you will get a green candle that's just going to destroy everything. But I'm remaining cautious, and I'm going to say that, I don't know when that's going to happen. I'm going to say, and I'm hopeful it will happen at some point, but I'm very happy that, that where the price is today, and I think it's just going to continue growing. And even if it means that that Bitcoin doesn't rise like it did in the past, but continues rising, that's how Bitcoin was designed to do. That it's deflationary money, and it's always going to rise. Your value is always going to rise over time.
Now zoom out even further. The real revolution isn't just price, it's architecture. You can regulate exchanges, you can regulate brokers, you can regulate reporting requirements, but you cannot regulate block production. You cannot vote to change 21 million. You cannot pass a bill that alters difficulty adjustment. Bitcoin isn't governed by politicians. It's governed by math and time. And that's why the Clarity Act is interesting. Not because it saves Bitcoin. Bitcoin doesn't need saving, as we all know, but because clarity reduces friction. And friction is what slows capital. If institutions get legal certainty, they allocate faster. In the short term, less uncertainty equals capital inflow acceleration. In the medium term, more capital flowing into a fixed supply asset equals intensified supply shock dynamics. Because issuance doesn't change, no matter how many pages Congress writes. Bitcoin doesn't need permission to exist. But if clarity makes capital comfortable, well, then that's gasoline for number go up.
So the status right now, the House passed the Clarity Act, their version of it last year, over to the House in July, I believe. And the Senate has taken it up and made its own changes to it and is fashioning their own version. We were able to pass half of the bill out of the Ag Committee that handles the CFTC portions. And now we're just stuck in the Banking Committee for the SEC portions, the securities portions of that bill. So there was a markup that was scheduled on, I believe, January 18th that unfortunately got pulled down. postponed, but we're working hard to address the issues that were raised that led to the postponement of that markup and hopefully get that back on the books soon. And then once we pass that out of the banking committee, the two pieces of the legislation will need to be reconciled before a final vote on the floor. So more work to be done, but we're a step closer with the passage of the ag portion of this a couple weeks ago.
Patrick, who has to bend a little bit ultimately to get this over the finish line? Is it the crypto community or the banking community?
Not to be cliche, it's a little bit of both, and we've encouraged both parties. We've had conversations individually. We've hosted a number of meetings here at the White House. We might host another one again next week on this issue of stablecoin rewards and yield. And it's unfortunate that this has become such a big issue because ultimately this is not the stablecoin bill. That was the Genius Act. But we've heard from senators on both sides of the aisle concerns about potential deposit flight from stable coins on different platforms. And so what we've encouraged both sides to do is let's find a middle ground. Let's use a scalpel here to address this narrow issue of idle yield, let's call it. But let's not take a chainsaw to this. Let's not let this derail the bill. There is so much goodness in this bill, no matter what your perspective is. The banks, there's a lot of permissible activities. It allows these institutions to now play in the crypto space in a way that without that regulatory clarity, they wouldn't be able to. And then obviously from the crypto side, the regulatory jurisdiction, the clear lines between the SEC, the CFTC, developer protections in the bill. There's just a litany of excellent measures in here that are critical to future-proof this industry from a future Gary Gensler or, God forbid, a Secretary of the Treasury, Elizabeth Warren. So we want to make sure that people are approaching this the right way, that they recognize the value of this bill. And we're going to keep working to make it better, but ultimately it is a good product at the end of the day.
That doesn't sound like a funeral. That sounds like infrastructure being formalized, and formalization isn't death. It's transition. And speaking of sovereignty, you can't talk about the future of global money without talking about mining, because miners don't just secure the network, they secure the revolution. So if you want to understand where the industry is heading, and if you want to be in the room where the real signal is happening, you need to be at Mining Disrupt. Mining Disrupt 2025 is almost here, and you don't want to miss it. The biggest Bitcoin mining event of the year is taking over Miami, Florida, July 21st to the 23rd. This may be the most important Bitcoin mining event in history. The biggest names in the industry, cutting-edge rigs, Bitcoin, and AI integration. The signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. So yes, maybe the speculative crypto circus is cooling off. Maybe the influence era is fading. Maybe the casino phase needed to burn out. But under the surface, search interest is rising, prices snapping violently, capital is positioning, regulatory clarity is forming, and Bitcoin, not crypto, is separating in real time. The New York Times might think that they're closing the book, but historically, obituaries in this space don't age well. So before you decide that we're cooked, look at the data, look at the search interest, look at the way that the price moves when it finally moves, and then ask yourself, is it the end, or is it the quiet part before the next leg up? Historically, I know how this movie ends. Drop your thoughts below in the comments, hit the subscribe button, smash the like button, and as always, stack slay and stay bullish, baby.